Today with Tara, as soon as she makes it back, are myself, Lindsay Brock, and Sherry McKinney, both of us who are advisors with Stearns Financial Group who specialize in financial planning. Today, we'd like to begin the session by highlighting a few examples of how our clients and friends of the firm are helping in the community during our current crisis. Bill, can you click to the next slide? So a few examples here are hospital administrative employees who have nursing experience are going through training to be able to serve as a nurse if there becomes a nurse shortage in their area. Another client has made over 200 face masks for medical staff and people at high risk. A local restaurant owner noted that someone recently tipped $500 for a meal just to ensure that they may be able to stay in business. And lastly, we've heard that one of our clients is offering free online meditation classes. So thank you all for all of the wonderful things you're doing for our community in this time. The first thing I will do is I will provide a quick regulatory update. Bill, can you switch to the next slide? So a few updates to our recent chats and let's talk about it items. We just wanted to make you sure that you were well up to date. There is an additional tax update that's been released. For those of you who pay quarterly estimated taxes, your second quarter estimated tax deadline is no longer June 15th this year. The deadline has now been moved to July 15th, aligning with both the first quarter estimated tax deadline, as well as the 2019 tax filing and payment deadline. Next, we are pleased to announce that yesterday, an additional $484 billion in relief funds was passed in the House. This bill includes more than $320 billion in new funds for the Paycheck Protection Program, which gives small companies loans that could be forgiven if they use them on wages, benefits, rent, and utilities. Within that pool, about $60 billion would be set aside for businesses that do not have established banking relationships, like rural and minority-owned companies. In addition, the relief funds include $60 billion for Small Business Administration disaster assistance loans and grants, $75 billion in grants to hospitals overwhelmed with COVID-19 patients, and $25 billion to bolster coronavirus testing. The president is expected to sign this bill into existence today. Now to turn to Sherry. As we've been talking to clients over the last few months, our most immediate planning has been focused around confirming cash flow needs are being met and emergency funds are available. Sherry, how much cash do you recommend someone have in their emergency fund during our current crisis?
Thank you, Lindsay. If you're still working, we typically recommend that you have 3 to 6 months of cash reserves in a normal environment. Of course, this environment isn't normal, so you could easily extend that to 6 to 12 months. For retirees who are currently taking portfolio distributions, having between 12 and 24 months of cash can help you to avoid having to pull money out when portfolio values are down. Now, you might be thinking to yourself, portfolios are already down, so should I raise cash now? If you need cash, keep in mind that since the year-to-date market low was reached on March 23rd, portfolios have rebounded significantly. So it's not a bad time to increase cash reserves if you need to.
Thank you, Sherry. And since you were talking about it a little bit, what are some ways to improve your cash flow?
Thank you, Lindsay. Let's talk first about someone who may have lost their job. If you have lost your job permanently or you've been temporarily furloughed, have you applied for unemployment insurance? Both the federal and state benefits are accessed through your state unemployment website. While state benefits vary from state to state, the federal benefit is $600 per week, no matter how much you previously earned, and the benefits will be paid for 4 months. For the federal benefit, you don't have to prove that you're currently seeking employment, which is different than the normal rule, and the federal benefits are also being made available to self-employed contractors and gig workers who don't normally qualify for unemployment. Keep in mind that any benefits you do receive are taxable income, So it's a good idea to have taxes withheld as you're receiving the payments so you don't run into a surprise when you file your tax return next year. Now I'm going to switch and talk about retirees. If you're 62 years or older, you can consider turning on some of your retirement benefits a little bit earlier than perhaps you had planned, like Social Security, annuities, or pensions. As your situation changes, you would have the option to stop the Social Security benefits later and then start it again when you're ready. And you would get increased deferral credits from the point that it's stopped. For both workers and retirees that might need to take a portfolio withdrawal, I think it's helpful to understand that bonds and cash become a greater percentage of your portfolio when the stock market goes down. So if you do need to use some of your more conservative assets like cash or bonds to assist with your cash flow, your portfolio may not be getting riskier, but rather rebalanced closer to your original target. If you find yourself potentially needing a cash source from your portfolio due to the reduced or paused earnings, talk with your financial advisor about setting aside some of this cash as a pool of protection. For our workers and retirees that have outstanding debt, consider restructuring your loans. First, let's talk about mortgage forbearance. Contact your mortgage loan service provider to see if you can make interest-only payments or pause the payments. But be sure to ask how is that interest going to be handled in the meantime? Will the interest be forgiven? Will it be added to the end of your loan as a balloon payment? Or will the payment terms just be extended out longer to where you make extra payments at the end of the term? It's best to get this in writing and keep it with your important records. And also, you could consider refinancing your mortgage. Interest rates have dropped significantly over the last few weeks, and it's possible that you could lower your payment with a lower rate. Also, you could consider extending the term of your loan to reduce your cash outflow. Second, consider using a home equity line of credit. Current interest rates are quite low, so it could be beneficial to use your home equity as a cash resource instead of selling portfolio assets while the values are down. Now, really, this is more of a question of your tolerance for risk because many people do not want to use debt in this way. However, if you're a person that is not debt adverse, consider this option. Third, stop student loan payments. Payments for federal family education loans and direct loan programs, both of which are federally funded loans, are automatically suspended through September 30th. During this time, no interest will accrue, and any payments that you do make are fully applied to the principal balance. So this could actually be beneficial. While this only applies to federal loans, many private lenders are also offering some type of relief. So make sure to call your service provider and ask for details regarding your specific loan. Keep in mind, if your loan has forgiveness attached to it, an example of this would be perhaps a teacher who, as long as they work in the same state, will get some portion of their student loans forgiven at the end of that period. If that is the case for you, you should contact your lender to confirm whether you can pause making payments, as you're not going to get any incremental benefits from making these payments.
Thanks, Sherry. So since under the CARES Act, required minimum distributions, or RMDs, are not mandatory in 2020. So how would someone decide if they should make a retirement account withdrawal or avoid withdrawing money this year to allow their account to recover? I'll explain. First, the thing that you should consider is if you do need income, your RMD is a good source of cash flow for you to use for your spending. So if you currently use it, then continue to do so for your expenses. Another idea is to consider using this as a resource for your charitable giving. You can give directly to a charity from your IRA. This is called a qualified charitable distribution, up to $100,000, and it won't be taxable income to you in that year. This is especially beneficial for anyone who's no longer able to itemize deductions on their tax returns. Ask your financial advisor and your tax advisor to help you make the best decision for your situation. Next, consider the following if you have non-charitable beneficiaries. With the new SECURE Act implemented just a few months ago, non-spouse beneficiaries of retirement accounts can no longer take distributions over their lifetime. Instead, the account must be completely distributed within 10 years following the year of death. By moving some assets out of your IRA now, your heirs will have less taxable required distributions later, when perhaps they're in their highest income earning years and therefore in their highest tax bracket. The sunset of the Tax Cuts and Jobs Act in 2026 already has known tax rate increases coming in the future, unless additional tax law is passed in the meantime. Also, many people are concerned that tax rates are likely to increase to help tackle the deficit. If your financial plan shows that you have a large margin of safety, instead of spending your normal RMD, consider taking that same amount and rolling it into a Roth IRA. Income tax will be due on the distribution, but all future earnings in the Roth will be tax-free. If you can do this with an asset that you believe will appreciate, you'll be taking advantage of market recovery inside your taxable Roth, allowing you the chance to convert a greater percentage of your portfolio to a Roth for the same tax dollar consequences. Alternatively, if a Roth conversion may not be right for you in 2020, you can withdraw the assets from your IRA and pay the income tax on the withdrawal with the intentions of reinvesting in a taxable individual brokerage account. We have found that the best financial plans have portfolios made up of multiple tax-structured accounts, so be sure to consider this in the context of your broader financial plan. So I've mentioned that a Roth conversion may be beneficial, but I'll help you understand some of the factors that will help you know if a Roth conversion should really be seriously considered. First, you should ask yourself, when will you need the funds? If it is sooner rather than later, the Roth conversion is not really that helpful right now. If it's not for many years, or if you plan to leave it as an inheritance, this could be a good time to do a Roth conversion. Another question to ask yourself is, what is your tax rate now, and what will it be when funds are needed? If your tax rates will be lower in 2020 due to loss of income, this could be an opportune time to do a Roth conversion at lower tax rates. If your tax rates will be higher in the future, then a Roth conversion is more appropriate. And lastly, ask yourself, do I have the money to cover the additional tax liability this will generate? Keep in mind that to maximize this benefit, you should not plan to pay for the taxes for this conversion from IRA money, but instead from your cash flow or a taxable account.
Lindsay, thank you so much for those updates and for helping us understand what decisions we need to make around our opportunity to either take our required minimum distribution or potentially not take that distribution. And this is just such a great reminder of how all these decisions are really a one-size-fits-one. And so if these are considerations that you are making, we would encourage you to reach out to your advisor and talk about all the details of your specific situation. Sherry, I think during this time, no one really wants to think about their mortality, but it's put it more on the forefront of our minds. Can you help us think about, is this an opportunity for us to think about any estate planning opportunities?
Thanks, Tara. It sure is, especially if you own assets such as a business or real estate, where perhaps the value has declined substantially in the last few months. You can consider gifting assets like these to the next generation while the values are lower. And the maximum estate exemption is still pretty high. Remember, the estate exemption is going to automatically sunset back to $5 million adjusted for inflation in 2026, if no other changes are made.
Great. Thanks for that opportunity. Sherry, also, as we're thinking about this and people are spending more and more time at home, we know lots of people are cleaning out closets and doing things like that, but would now be a time to think about what's in their estate documents and if they should update those?
Tara, this is a great time to get your documents in order. Are all your estate documents current and available? Let's talk about some of the most important documents for a moment. First, your healthcare power of attorney. Locate your signed copy and keep it in a convenient location just in case it's needed. Next, your living will. Do you need to update this? Remember, your living will outlines your end-of-life wishes, and it helps to prevent confusion and disagreement. Perhaps you previously selected that you did not want to be on life support. With COVID-19 often requiring ventilators for more severe cases of the disease, you might want to reconsider your options. Next, are your estate documents up to date? If more than 5 years have passed since you last updated these documents, now might be a really good time to revisit them. Many legal and regulatory details have changed in that 5-year period. And perhaps even your desires have changed in that amount of time as well. Do you recall who you named as your executor, your trustee, your power of attorney? Do you recall who your beneficiaries are? Do you know if you named a contingent beneficiary where needed? And do you have a copy of those signed documents with your most important papers? Have any of your beneficiaries gotten married, divorced, come of age, or passed away? If any of this is unclear in your mind, it's likely time to revisit these decisions. And last, organize your records for end of life. Several years ago, we highlighted the Everything Binder book, which can be purchased online at Amazon, Target, or Walmart. And it's a great tool for gathering all the information that your executor, trustee, children, and heirs would need to settle your estate and implement your last wishes. Perhaps social distancing is allowing you some extra time to organize and reflect. So we can encourage you to use this time to document your wishes and provide peace of mind to your loved ones.
Sherry, thank you for that update on what to be thinking about during some of our extra time at home that we have. We've covered a lot of opportunities for planning and a lot of things to be thinking about. But one thing a lot of our clients have been asking us as we've been talking to them over the last few weeks is really, do we have any ideas or ways that they might be able to help out in their community? And I highlighted some examples, but Lindsay, can you talk about some other potential things that clients could be doing to help their communities?
Sure. Some ways that you as an individual can have a positive impact on your community at this time. I would say first and foremost, take care of yourself. While this may not seem like a way to help others, remember that if you take care of yourself first, then you'll decrease the likelihood of needing your community to care for you. Next, call your friends and neighbors to check in and make sure that they can obtain adequate food and supplies, including their medications. Remember that we're all learning new ways to maintain social distancing, and ordering supplies online may be new to your friends and neighbors. Call your friends and neighbors to just talk and see how they're doing. Yesterday, I witnessed the children in our neighborhood doing this by standing at the end of their driveways and yelling across the street to see what they had each been doing. They then decided to use the sidewalk chalk that they had to draw pictures for each other on their own driveways. Call in for your local heroes, medical staff, firefighters, police officers, and many, many more to find out if they have a need that you can meet. If you're able, financially, continue to pay for the services that you typically receive but are currently unable to receive. For example, your housekeeper, your hairstylist, your personal trainer, or maybe your boutique gym. Purchase gift cards from your local restaurants and stores to use later. This provides the business with cash flow now when it's critical to their survival. In the meantime, also, while you're ordering takeout or curbside pickup from your favorite restaurant, consider leaving a larger than normal tip to help those employees who rely on tip income. And then lastly, again, if you are financially able, continue to make your charitable contributions. Some organizations need even more funding today because of the impacts that they are making on the community. One example of an organization needing more funding right now is those who are providing food for children who are no longer receiving food through their school system.
Great. Thank you, Lindsay, for those ideas. And we would love to, if you have ideas we didn't mention here, to share those with us. Sherry, we have a couple of questions, and I'm going to start out with the first few, and then Lindsay, maybe you can add a few more in. But Sherry, since we're all socially distancing, is it possible to actually update my estate documents at this time?
Tara, that's a great question. In this, isolation world that we're living in, that question would reach my mind as well. So I talked to one of our estate planning attorneys the other day, and she told me that they are indeed processing estate documents right now. They're doing this by phone calls, email of documents to approve them, and then they'll actually meet out at your car to have you sign them with all the appropriate protection equipment like gloves and masks and things like that. So yes, it is.
Great, Sherry. Thanks for that information. Lindsay, you mentioned in here a couple of ways to make donations to charitable organizations. Can you talk about what might be tax efficient ways that we should consider that you maybe didn't mention?
That's a great question. So I will nuance this by saying this is very heavily dependent on your situation. If you are over 70 and a half, as I mentioned, the qualified charitable distribution is probably going to be one of your best options to make charitable donations. But if you're under age 70 and a half, one of the best ways that you can give charitably is doing it through using stock that has low tax basis. So if you had purchased it a long time ago and it has been it's appreciated quite a bit over time, then if you gift that stock away, the charity receives the current value and you don't have to realize the taxes on that growth. So that's one of the best ways that you can give if you're under age 70 and a half.
Thank you, Lindsay. Another question we have is, Sherry, maybe you can help us with this. They keep hearing that people are receiving unemployment payments and others are not. Do you have any insight into who is and who is not yet receiving those payments?
Yes, Tara, I did read the other day, and I was glad to read because several people have been asking, why am I receiving my payment and other people are not? And apparently the government sent unemployment first to people that were technically an employee, the type of person who would receive a W-2. And the people that are contractors or self-employed are just now being considered for these benefits. In fact, I saw a recommendation that you log back into your unemployment website and update the information to make sure that they'll process your request. So if you're self-employed or a contractor, then this would be a time to check in on your unemployment request.
Great, thank you for that insight, Sherry. And another question where we might need some insight, Lindsay, maybe you can help us with this, that the stimulus checks, do you know how those are being distributed?
Yes. So for those of you that had received a tax rebate or had paid taxes through a checking or savings account, you should have already received your stimulus check electronically. If you have not, it's because there was a problem with the link in your account, and you can check the website. We're happy to provide that for you if you need guidance, but you can check the website to see the status of your check. If you are expecting a hard copy paper check, the way that the government is sending those out is based on your AGI. So if you had an AGI under $10,000 for last year, then your check has already been sent out, and some of them are going to start to be received as of today. If you've received a little bit, or if you have an AGI a little bit over $10,000, you'll be the next to receive your check, and then on, going up to the maximum AGI of $150,000, being the last ones to receive their paper check.
Great. And Lindsay, can you remind us what AGI stands for?
Sure. AGI is your adjusted gross income.
Great. Thank you, Lindsay. We are running short on time, but we will answer additional questions in this weekend's chat or future chat, so be looking for those. And just as a reminder, at 4 p.m. today, we're going to be hosting a session with Linda Lutz, who is an experienced career coach. And so if you have children who this may interest, you may also want to share that link with them so they can join us this afternoon. I just want to say a thank you to Sherry and Lindsay for helping us think about what we really need to be thinking about from a planning perspective during our current crisis, things that affect our everyday and things that can help us plan for the future. And it was such a great reminder that everything has a lot of caveats. And so this is a one-size-fits-one for everything. And so we hope that you will reach out to your advisor and discuss your unique situation with them so that you can get a specific answer for your situation. Thanks for joining us today.
Oh, hold on, Tara. We do have one more question, and I think we have enough time. We have 2 minutes left. So we will take a question here that says, what are the current mortgage rates and HELOC rates? Sherry, can you help us with that?
I can help with what I have seen online for a mortgage rate. Recently saw that 2.59 for a 30-year mortgage was available. Of course, check with your local lenders. I have one person that told me they did not find that rate to be available when they went searching.
Yeah, thank you, Sherry. And I know a lot of those rates are dependent on your unique situation, your mortgage balance, your credit score, all of those items, but they are considerably lower than they have been in years past. And then lastly, we have one last question before we run out of time. It's asking if we can clarify if Roth earnings are tax-free without a sunset. So regardless of the sunset that's currently scheduled or not, Roth earnings are currently tax-free as long as you don't withdraw the Roth assets before 5 years of holding them in the account. And that just means that the account has to have been opened for 5 years. So although we wouldn't want to put a restriction of 5 years on your intentions, that is a good guideline to say that if you are going to need the assets within 5 years, Roth is perhaps not the best option for you. But yes, to answer your question, the earnings in a Roth account are tax-free because they are after-tax dollars and they will never be taxed again under current law.
Great. Thank you for covering those, Lindsay and Sherry. And we really appreciate everyone taking time this morning to listen in on planning opportunities. Thanks for joining us, and we look forward to seeing you this afternoon.